Welcome to your financial journey, understanding credit. Why does credit matter? Credit's not just about borrowing money. It's truly a tool that allows you to buy something now and pay later. This is all about building a solid track record. But why is that important? Because it makes it easier for you to borrow when you want to meet your financial goals. We're going to look at a few things in this video. First, credit basics, understanding the fundamental principles of how credit works. Second, we'll look at the credit score. This is related to your financial reputation. It's going to influence your ability to borrow and the terms that you'll receive. Finally, we'll look at cash versus credit. Looking at when should we use credit and when should we use cash can be a game changer in managing your finances wisely. Being wise with credit now sets you up for success later. It's all about making informed, empowered decisions. The word credit can be quite versatile. It's important to grasp what it means when you're talking about using credit, checking your credit, or building credit. This is foundational knowledge that's crucial for making informed decisions in your financial journey. Let's talk about building credit. Loans, like student loans, become a part of your credit history. Your payment history can either bolster or damage your credit. It's crucial to understand your options to make informed decisions. Credit cards are another venue of building credit. You may start as an authorized user on a family member's card or get your own. Both paths help build your credit and manage expenses. Keep in mind that credit is about buying now and paying later. Where you are in life affects your credit choices. Establishing a positive credit history early can be a game changer for your financial journey. When you're renting an apartment, landlords typically perform credit checks. This is another reason to keep your credit in good shape. Similarly, if an auto loan is on your horizon, a better credit score can mean more favorable loan options and interest rates. Building a solid credit foundation now can set you up for success in the future. What's in a word? Let's look at some of the different words associated with credit. First, there's the actual credit. Think of it as your ability to buy now and pay later. It's a very common principle in our financial lives. Then you have the credit bureau. This is an organization that's going to collect and maintain your credit information. It's important to know that most of your credit activities are going to be reported to the bureau. Your credit report is essentially your financial track record and shows how you've handled credit over time. Finally, you have your credit score. This is a 3-digit number that indicates how likely you are to repay a loan and make your payments on time. It's a crucial figure that can influence many financial decisions. Understanding these different terms can help you make informed financial choices. Let's keep those definitions in mind as we continue exploring credit. Your credit score is a crucial part of your financial life, represented by a 3-digit number that reflects your borrowing and payment history. It's important to understand that your credit score isn't just a random number. It's based on specific information gathered by 3 main credit bureaus: TransUnion, Equifax, and Experian. These bureaus collect data from companies that have lent you money, and they compile this information to generate your score. Think of your credit score as your financial report card. Just like in school, where your grades reflect your performance, your credit score reflects how well you manage your financial responsibilities. It helps lenders assess your creditworthiness and can influence the terms and conditions that you're offered on loans and credit cards. What makes up your credit score? The percentages can vary slightly, but the main categories that are assessed are your payment history, the age and type of credit, the percent of credit limit used, the balance you carry on the credit, your recent credit, and the available credit that you have. The biggest portion of your credit score is made up with your payment history. So again, keeping track of your payments is important to your credit score and your financial journey. Credit scores range from 300 to 850. Again, the score isn't just a number, it's going to tell a story about your financial behavior. Now, the interpretation of this score can vary from one scoring company to another. What one may consider very poor, another might classify differently. Despite this, the consensus remains. Your credit score influences the decision that lenders make regarding the terms of your credit, including interest rates. Lenders are going to use this score to assess the risk of lending to you, so it's crucial to maintain a good score. Remember, the better your score, the more favorable your credit terms will be. As we move forward, we'll look at how interest rates can be tied to these scores, which will affect the total cost that you're borrowing. Interest rates are essentially what you're charged for borrowing money. Whether it's a student loan, credit card, or any other credit account, the interest is the extra amount you repay over what you have initially borrowed. This can add up over time, so understanding the background is crucial. We're going to look at two terms. Your annual percentage rate, or APR, represents the yearly cost of borrowing, including any fees. It's important to note that the interest rate and the APR might differ based on the type of credit account that you have. Be sure to carefully review your contract details to understand these rates thoroughly. These terms are common across all types of credit, and having a solid grasp on them can help you make more informed decisions. When you're using credit for the first time, lenders may see you as a higher risk, which can result in some higher interest rates. Some credit accounts also come with a yearly fee, so it's important to factor that into your cost calculations. Additionally, be aware that some promotional interest rates may only last for a limited amount of time, so it's crucial to understand the terms before committing. For example, on a loan with a 12% interest rate is going to pay less than a loan with a 15% interest rate. That 3% may not seem like a lot, but it can add up to a huge difference by the end of your loan terms. Let's explore the 4Ws of credit reports as we provide a deeper insight into understanding and managing your credit. Why should you care about your credit report? Creditors are reporting your payment history to those three major credit bureaus, Equifax, Experian, and TransUnion. The bureaus compile your account information and report it to scoring agencies to determine your credit score. Having an accurate credit score and history is going to significantly impact your finances as you go forward. Let's talk about those practical reasons. We mentioned landlords often using your credit score to assess your rental eligibility. Maintaining a good score can be the difference between securing that perfect apartment or not. Think about it, your credit score is more than just numbers. It's a reflection of your financial reliability. Keeping it accurate and up to date can open doors and provide peace of mind. What kind of information is visible on your credit report? There are going to be several key elements you want to be aware of. First, your credit accounts are usually very detailed, showing accounts that are in both good and poor standing, along with your payment history. This provides a clear view of how you manage credit over time. Next, you have the option to include a personal statement. This can be particularly useful if there's a negative report that you want to explain. It's your chance to provide context that might otherwise be missing. Public records are another component. These can include judgments like taxes or child support, especially if they're in collections. It's crucial to be aware of these as they can significantly impact your credit score. Also visible are credit inquiries. These are requests made to view your report. Frequent inquiries can sometimes affect your score, so it's good to be mindful of them. Now, what's not visible? Important personal details like your age, race, income, gender, your specific job, marital status, and neighborhood are not what is part of what credit reports reveal. This separation helps ensure a fair assessment based purely on financial behavior. Understanding what's included and what's not can empower you to take charge of your financial narrative. Who can see your credit report? There are a few different people that are able to access your credit report and credit score, including employers, landlords, bankers and lenders, insurance companies, utility companies, essentially anyone that is able to run a credit report for a fee. When should you request your credit report? It's important to monitor your credit reports. It's crucial you request all three reports at least every 12 months. This practice allows you to review everything thoroughly to ensure that all the information is correct and truly yours. Identity theft is unfortunately quite common, so staying vigilant is key. By regularly checking your reports, you can catch any discrepancies early and protect yourself from potential fraud. Now, if you do spot something amiss, don't panic. You should contact the credit bureau directly. You can send a dispute either online or through the mail to address any inaccuracies, but catching them early is key. Building credit is about creating a positive credit history. By wisely managing your credit, you contribute to a record that can open doors to future financial opportunities. The smart choices today pave the way for tomorrow.